So today I want to show you a short setup trade I took that printed money within 5 minutes of the market opening. I entered at 9:33 Eastern time and I got out by 9:35. And no, I wasn't just randomly guessing. This is an exact setup I look for every single day, and it happened to play out within those first 5 minutes of the market opening, and I want to show you exactly what that looked like. So hopefully you guys can learn a thing or two from this video. So anyways, let's get straight into the tutorial and trade recap from today. All right, what's up guys? So I actually ended up taking 2 trades today that ended up making me around $2,100 in total P&L on my live real money account. So anyways, I want to go over what those setups were, and the first one specifically is the short setup. This is one of my favorite setups. I know I say that about a lot of my setups, but it tends to have the highest win rate. So basically the trade I took today was on NQ futures, and this is what I trade every day. And as you can see, I basically entered right at market open. Now, my original target for this trade, guys, was way down here, and it would have been a 2R. I ended up taking this off way too soon, near these 30s areas. So I only got like a 0.7 RR. Typically not what I go for. Again, I was originally aiming for way down here or possibly even this 590 level on QQQ. So my trade was technically, not sexy looking, but it made some money right at the market open. Okay, so let me kind of break this down, right? Because we had this key level at 595 on QQQ. So for those who don't know, I look at QQQ levels for my actual levels, and then I use a price converter to change that to see where it would show up on NQ. So there's a price converter called QQQ to NQ, and you just put in the QQQ levels right here, right? So you can put in 595. And it'll show up right here on your NQ chart. So this is a free indicator if you guys want to use that. But anyways, if we go into what the market structure actually looks like, for those that don't know, I use institutional positioning to look at the market structure and get my key levels. And this basically uses the Greeks from the options market to see where institutions must hedge their position, so we can basically copy their trades, the big money, the people who control the market, and trade where they're going to trade. So that's essentially what we did this morning, right? When we see us break a key level like 595, we knew the institutions are going to have to sell, and sell all the way at least to this area, which is like 593, 592 on QQQ. And then the last area was that 590 level, which we perfectly bounced off of, went back to 595, got above it, and then started going to 600. Okay, so we're going to talk about the second trade I took. It was way up here as a long position from 601 to 602. But first, I want to go over the short trade, right? Because again, this is one of my highest win rate setups. I was actually looking at it. So anyways, if we go into this, I created a software called MaretkFlow. There's a link in the description if you guys want to check it out. But this will show you where institutional positioning is. Okay, so I'm mainly just looking at this top left box for now. All right, so if I go to the replay mode, I'm going to go to exactly what this looked like this morning. Okay, so we open up. As you can see, these are the regular Greeks. These don't show like the intraday ranges. This will show kind of like all the contracts on the market right now. We can see everything was very negative, right? We open up and we get the updated Greeks, the updated contracts after people, get out of all their positions, the first minute market opening. And we can see this is kind of what it looked like, okay? So basically we had a huge bar at 595, which is a key level. Anything that stands out is going to be a key level. So we had 600, 95, and 90. Again, I use a price converter to convert these levels. On my NQ chart, you can see they're all labeled here. We got 600, 95, and 90. So with that being said, once we broke 95, we knew we could possibly get into these next few bars that had some interest, which went down to 93. And then it kind of died out at 91 and 92. And then we had a big spike at 90. So this is basically telling us, hey, listen, if we break 95, dealers, institutions, liquidity providers, they're going to have to sell and hedge their positions to where there's more interest down at 93. And we could get all the way to 90. Once we get to 90, there's no interest below. We're for sure going to bounce. There's a 99% chance we're going to bounce here. But we can trade the short. So as soon as we break this level at 595, then we can get short and look to take it to 93. That was kind of my intention. since 92 and 91 kind of died. So anyways, if we kind of go into this, as we can see going forward, what happens, the 595 becomes the biggest bar now. So that's why it's labeled red. That's the biggest bar. We're in negative territory, which means there's going to be high volatility. So as you can see, we broke this bar. Okay, this is what time? 9:33 Eastern time. And you can see we have 9:30, 9:31, 9:32, and then 9:33 was this big breakdown bar. I got short right here. I entered my position, and I essentially rode this to 593. Okay, so if I just put on my price converter, I'll put 93 on real quick. Okay, and as you can see, it was around right here. Okay, so that's kind of where I exited, and the reason being, if we look 2 minutes forward at 9:35, go 2 minutes forward, right? As you can see, the interest was kind of just dying after. I probably should have held this at least to 92 now that I look back on it. But again, this is within 5 minutes of the market opening. Everything's happening super fast, right? And I just got out there. I was like, you know what? We got a quick flush down, made around, I don't know, 68 to 30, a solid 30 points or so. I'm going to get out of this, but obviously this thing ended up ripping down all the way to 590. Now, when we got to 590, that was at 944, right? We can see what the Greeks look like. Okay, we go forward 10 minutes. As you can see, 590 becomes the biggest red bar on delta hedging. There's no interest below, meaning this level has massive pressure to be support, right? So instead of just looking at regular candlesticks and saying, oh, we had some support here last week or yesterday, whatever it is, right? We can see the pressure of the support, right? Dealers have no reason to sell past this level, okay, because of how much interest is here and how much interest dies down afterwards. So naturally, we're going to get a bounce. Buyers are going to start stepping in. And this tells us we could go back to 95, right? We're going to bounce between the biggest bars. And to me, this is a more risky trade to go long here, obviously, because you're taking more of a reversal strategy. And we have so much negative institutional flow. So basically it just means a lot of sellers, but we could bounce back to 95, right? So I end up missing this trade. I didn't take this, but as you can see, we had a super clean run back to 95. This is a 200-point run. So there's just so many trading opportunities today. It was ridiculous. Again, I kind of listed out. I was like, no, I'm just going to stay out. So anyways, after that, we started chopping around between 95 and 600. So let me go to that's 10:40 Eastern time to kind of show you what the market looked like. So around 10:45, as you can see, we're kind of just in this weird period where the bars are super small. We're in between. We're not really sure what we want to do. So what this tells me is we're in consolidation area, right? And at this point, I was like, you know what? I'm just going to call it a day. I'm not going to take any more trades. Now, also, today, Powell was going to be speaking. I believe it was around 10:30 or something like that. I'm not sure exactly what time. What ended up happening was we had some nice increasing interest to 602. Okay, see how the bars are, just slowly going up? This means momentum. Okay, so basically, if we break above 600, we're probably going to go to 602, which is the peak. Okay, but first, the most important thing is we have to break 599, which is the first positive bar. This is where the delta starts to flip to positive. Okay, so anyways, as we can see, we end up chopping around here. This is that 600 area. I think Powell started speaking around, it must have been 10 a.m. my time, so 12 p.m. Eastern. So anyways, I ended up coming back to my charts around then, and I started seeing some opportunities. So this is at 10:11, so let's go to there. So that's 12:11 Eastern time. So let's go forward a few more minutes. And as we can see, this is what it looked like when Powell started speaking. Okay. So we're in this period where we had a negative bar, tiny positive bar, negative bar, and then we had a positive bar with increasing interest to 602 where it peaked out, and then we had 603 drop, right? So my next plan when I kind of saw this is, listen, if we break 601, there's a very high chance we're going to accelerate straight to 602, okay? And this is one of my setups I also take. Okay, I have 5 different setups I look for. So for example, we can kind of draw all these on the chart. Like today, we took setup 2, right here. This is that short setup that I first talked about, where we went short once we broke the negative bar, right? Rode to 590. And then this is the last negative bar. This is my setup number 4 I take, right? And then we have setup number 1 where we have buying flow. We have increasing interest to the green bar, right? But we have to break this first. Okay, this is important. We have to break this bar first, which this ended up being that 601 level. Okay, so basically I set an alert for 601. As you can see, we were bouncing off 600, came down, Powell started speaking, market started rallying. We initially had resistance off of 601, pulled back to 600, and then we broke above it right here. Okay, so as soon as we broke above 601 right here, I actually got an entry around right here, and I took this thing straight up to 602 and put my stop right below the level. So nice risk reward on this trade, and it played out nicely. So anyways, guys, that was my trade for the day. Like I said, it's just reading the market flows. Where does the market want to go? And really learning how to read the market structure, right? For example, an easier way to put this, right? I put inside our free Discord group in my trading plan today. This was the plan, right? If you want a really easy way to think about this, if this is kind of confusing to you, right? Pay attention to the market structure, okay? Today, we opened up with a bearish bias because everything was negative. If we hold below 600, we're going to 590. This is posted before the market opens, right? Bullish flip. If we break above 600, we're probably going to go to 603. Okay, so notice I'm only taking longs when the market structure flips to positive, right? We could have taken a long at 590 because that was basically the bottom. But we're reading the market structure, right? And we're kind of planning the trades around that, right? And this is kind of how you do that. We see where it's positive, that's where it flips. See where the bars start going up, right? That's where it flips the more bullish. And wherever we have the most interest, right, the tallest bars, that's where we're going to go to, okay? Or where we're likely going to go to. That's where the market makers, the liquidity providers are going to hedge their positions to that area, okay? If we open up negative and we start breaking these big bars, these huge levels, these key levels, right? If we start breaking below 595, well, now this level is going to act as huge resistance and market makers are going to start selling, right? And we're going to go down to, wherever the next target is. So anyways, it's really just think of this as reading market structure. Instead of looking at higher lows, higher highs, it's reading these bars as the market structure, seeing where the most interest is, seeing where we actually flip from negative and positive. So anyways, guys, I hope you enjoyed this video. We did a full 2-hour training last Thursday on this. So if you guys want to watch the replay, it'll make more sense on how to read this stuff. I posted it on my YouTube channel. I'll put a card up above if you guys want to check out that 2-hour training. And also, like I said, I just launched this MaretkFlow platform where you can read all this data in real time last Thursday. So if you guys want to get access to this and see this play out live every single day, I am doing a launch special since it just opened up. So if you guys want to join us, you get access to the MaretkFlow platform, all these indicators and tools and data we have on here. And then I'm also throwing in a 30-day mentorship bonus where I trade live every single day. We do daily mentorship calls, doing Q&A, going over the trades we took, keeping you accountable. We also have a private community, and you also get access to my OTS entry indicator. So this 30-day mentorship starts on October 20th, so there's still time to get in if you're watching this video before then. If you guys want to check it out, all you have to do is go over to that first link in the description below this video, or just head over to otsflow.co. So anyways, guys, that being said, hope you enjoyed this one. I'll see you guys tomorrow morning for another trading session. Anyways, guys, I'll see you in the next one. Have a good rest of your day.